Guys, guess what? I finally have a good thing to talk about. Tesla. We've been waiting so long. You know? You know? But yeah, guys, finally there is good news coming out about Tesla. Tesla has reported earnings recently, and it actually is doing better than expected. Or I guess a better way to say it is maybe it's not as bad as they thought it would be. You feel me? But yeah, we're gonna kind of get into this because I've been talking about how Teslas were going to be a lot cheaper in the United States and the UK after they were cheaper in China, because they're really looking to push demand, and this will really show us what's going on with the numbers right now. It's you can always talk and speculate, which is what I've been doing, and I was right, by the way. And so you could have got a discount on a Tesla if you had been listening to me, you know what I'm saying? But anyways, you know what I'm saying? It's good to be able to actually look in the numbers and see that, because I think Tesla's stock price actually rose 11%, which is a very large amount. You already know they were down like, what, 50 or 60% or something. So they really needed that type of recovery. But I'm not going to hold you up. Let's get into these numbers with Tesla and everything like that. And if you enjoyed the channel, make sure to like, comment, and subscribe so I can keep bringing you this content. All right. Now it says Tesla shares pop on better than feared. Better than feared, not better than expected. Better than feared earnings results, demand outlook. Now it says Tesla shares rose as much as 11% on Thursday morning after beating on the top and bottom lines mixed analyst sentiment about the vehicle manufacturer's outlook. Well, that's crazy, because I mean everybody was thinking Tesla was it wasn't looking hot, guys. It definitely wasn't looking hot, because look here. Look what it says. They cut prices at the end of 2022 and into 2023, a move that seems to have sparked demand. That's exactly why they did it. Come on, guys. We all know this is just simple supply and demand. If the price goes down, if you bring the price goes down, the demand is going to go up, because people who couldn't afford it can now afford it. Now, he offered a caveated but optimistic outlook for production in 2023. He said if it's a smooth year without some big supply interruption or massive problem, we have the potential to do 2 million cars this year. I think there will be demand for that too, he told an analyst. And this is true. I mean, a lot of the reasons why Tesla has had so many issues has been for two reasons. The C19 came around, and that made it extremely hard to get materials from anyone, because obviously ships weren't going across the world when we're in a pandemic. That just doesn't make sense. Also, with that, there was a huge chip shortage coming during this time, and as you guys know, Teslas are electronic cars. It's essentially a moving laptop or a moving desktop computer, and so they have to run on these chips. I don't think it's M1 chip like the phones, but obviously it's a chip that's associated with Tesla, and getting the materials and stuff for those chips is hard. Finding those chips is hard, and that's why if you were turning in any type of electronics and anything back in those a few years ago, you would get a lot of money back, and that's because people would rather have like the older chips than try to get the new ones, because the new ones are crazy expensive and they're extremely difficult to find. But if Tesla doesn't have to deal with this problem, then maybe they'll continue to dominate the industry like they did pre-pandemic. Which is what he's saying here. He's saying pretty much if that doesn't happen, I think we can pump out 2 million cars. Now, he said thus far in January, we've seen the strongest orders year to date than ever in our history. We're currently seeing orders of almost twice the rate of production. So that's really good for Tesla. And, this is going to be something good that a shareholder is really going to be paying attention to. If you were already kind of holding on to Tesla, and I know you're holding on for dear life, because Jesus, Tesla got hit it got hit with 1,000 thoughts in a Nissan Altima, and multiple Nissan Altimas just running straight into you on the highway going 85 miles an hour with a bunch of police officers in the back. You know what I'm saying? Like, Tesla got smacked. So if you're trying to hold Tesla, this is good news for you. Or if you're someone who's looking to get into Tesla, the price has gotten beat down. This might be, a good time to start looking for an entry, that kind of thing. Now, he said this in an investor call on Wednesday. Now, they reported an automotive revenue of $21.3 billion in the fourth quarter and adjusted earnings per share of 1.19. or $1.19. Excuse me. Now, analysts, of course, are going to feel a little bit different, and they were mixed in their response to the Tesla report. They said something for the Bulls and the Bears. A headline from the Bernstein's Thursday morning report read. Bernstein noted that it remained torn on Tesla stock and reiterated its underperform rating. So even after this, they're still giving it an unperform rating. As you guys know, all the hedge funds and media outlets like that can give these stocks a rating to kind of help customers know like where they move on it. If your hedge fund is thinking a company is going to be doing well or something, they may giving it it's going to perform, and that just kind of lets the customers know like, okay, this is what these certain companies think, or it'll be analysts. Like, so let's say they'll take 50 analysts and they'll say, okay, 35 of them said underperform, 10 said that it's static, it's moderate in the middle, I don't know what that word would be, and then some will say like overperform. So that's just something to consider. Now Morgan Stanley's Adam Jonas was more sanguine, reiterating an overweight rating with a 220 price target. Better than feared, wrote an analyst, I can't say that name, in a Wednesday night note. He maintained its buy rating with a 275 price target. So a lot of people are liking this, some are not. So it's still, it's still bouncing around. Some people feel that way, feel good about it. Some people do not. Now it says Tesla did not issue new guidance, but noted its earnings release that it planned to grow production as quickly as possible in alignment with the 50% compound annual growth rate target we began guiding to in early 2021, which obviously all this production is obviously going to bring the prices of Teslas down, but it's going to bring the revenue up. So that's good for the stock price. As far as owning a Tesla, I mean, obviously it's not going to be as prestigious as it once was if the price has to go down a bunch based on overproducing. But I mean, maybe this isn't overproducing and this is exactly how much they could produce. And I think it would be really good for Tesla to kind of get away from being like considered an extremely luxury brand. And I think it would be better if they were something that was like, the car for the middle class to upper middle class, that they can all kind of afford, but it still like has some prestige to it. Not something like a supercar, a Lambo, a Audi or a Mercedes, what I'm saying? Something like that, but a little bit under that, especially as an EV, being able to get all the government tax cuts that they get. I feel like that would be a really good place for them to sell not only a lot of cars, but for people who have the cars to still kind of have that, hey, what I'm saying, I drive a Tesla, I go to Whole Foods, because that's really their kind of market. Let's keep it a stack. So let me know what you guys think about this. Where do you guys see the future of Tesla? Do you guys see it being like the luxury brand that it had started to become, in which prices were getting very, very expensive for these model Teslas? Or do you guys see it being, kind of like the first real electrical car that people actually really rock with, and which is essentially what it was, and it's actually affordable, and you can get it as a relatively I guess average person, what I'm saying, something like that. What do you guys think would be better for the company? Also, let me know what you guys think about Elon Musk and Tesla as a stock itself. Do you guys think this is really going to help it out, and with the extra push in revenue probably from these cars, that Tesla stock will possibly have a good 2023? Or do you guys think that Elon Musk is going to step in, kind of start screwing some stuff up? This is just not going to be it. They're going to keep having to cut prices because production is not going to be where they want it to be, and so on and so forth, and it wouldn't be a good buy for the year. So just let me know how you guys feel. Also, like, comment, subscribe to help the channel grow. I really appreciate it, and I love you guys, and you guys have a great and amazing day.